What's good, YouTube? I hope you're doing good. I hope the trading's going great. I hope that you're actually seeing some profits, yo. If not, lock in. It's time to lock in, yo. Join the free chat down below, get free signals, and you're going to be able to copy all the trades that I'll be taking here on Pocket Options for free. All you got to do is just join the free chat down below. It's free. But with that, let's get into this video. Today what we're going to talk about is basically breaking down my strategy on just breaking down the trade completely so you can get a full grasp and understanding of how I'm executing the trade from opening the chart to executing the trade. And this is years of experience, but instead of a 23-second trade, I'm going to show you how you can do it with a 1-minute trade. I'm going to show you how you can even do it with a 5-minute trade. But ultimately, you can utilize this information and win. Like, you can utilize this strategy and take it anywhere from Forex to crypto to anywhere and win. That's the best part. But you got to understand what you're first looking at. And it's going to be simple terms like, again, this is thousands of hours sitting in front of the screen all day trading. Understanding what I'm looking at. I can open a chart, find the imbalance, see a pattern, and execute the trade. It's all about putting in that work and putting in the time. That's why a lot of people fail. A, they don't want to put the time in, and B, they normally give up before they can put the time in because neither they don't like losing, or they just don't want to put the work in, and somebody else lost their money for them, and now they're mad at that person. It is what it is. You gotta pay your tuition to learn in this. You're not just, So whether you want to buy a course or you want to go, just copy somebody else and not really know what you're looking at, you're gonna fail. The goal for you is to understand what you're looking at. Well, let's go ahead and jump up in these charts real quick. So today what we're looking at, I'm going to show you how you can do this with one chart, like one time frame, and 1 minute. It's very simple, very easy. Go ahead, call it that 1-1, call it the 1-1-1 strategy. We're looking here at McDonald's. This is looking like a beautiful trade, honestly. I think I'm going to go ahead and take it. Let me go ahead and set this down a little bit, divide this. So let's go ahead and take a 5-minute trade. Now, the reason why I'm taking this trade, what I'm seeing down here, I got this nice key level. I know that we're touching an area here, an area of interest, which is fine. That's understandable. I also know that we just came off another key level, which I would call somewhere right about here. So we're still in a range. Okay, and why I took the trade and why it looks so good, well, we obviously have this pattern. Oh, that's ugly. That is ugly. Boom, boom. Now we got this, and now we're pushing down. Okay, what I also seen was these candles are nice. Nice, strong move. We got 2, 1, cleared. That was too close for comfort. This area right here obviously held a lot more weight than what I assumed, but off of the momentum, and we got this nice pattern with this imbalance down here. This is the key level here. This is right here. I wouldn't consider this my key level. My key level is down here. Why? Because if I go back to the higher time frame, which I haven't even went to the higher time frame, but if I go back to the higher time frame, I'm going to know that this is a higher time frame zone. Just off of the move that it made. Look how strong the move came, and it directly shoved off. Okay? When you see moves like this, you can indicate on a lower time frame that's most certainly, more than likely, a level, right? You have it here, and now look at that. Oh, it created a level. So now I would say, oh, okay, this would be a level here, which we could move this up if we wanted. But let me go ahead and put this back and show you that this here is a key level on the higher time frame. Go to that 5 minute. Boom. Look at that. Key level. Boom. You could bring it up some. And you could bring this. That's a decent spot. So it's not about, oh, I got to be exactly on point. You don't have to be exactly on point. Let's break this down. Okay. Let's go down to the 30-second. Let's go ahead and let's look to a different chart. All right, let's go ahead and look at a different chart and kind of explain it. Okay. Sometimes you need to spread it out so you can see it all the way. Give us some more room here. Okay. So now when you're looking at this chart, this is the 30-second time frame. We can identify the areas, or we can identify the key areas, the main levels, the higher time frame areas of interest. We can identify this just by looking at this chart and seeing it. Now, it does not have to be exact, but it's very easy to kind of understand. Why? Because price moves in between these higher time frame zones. That's pretty much it. Price is moving in between these zones, and we're just utilizing the lower time frame and the volatility of the lower time frame to catch our trades. That's all we're doing. It's a higher time frame move, but we're so zoomed in. There's so much volatility happening on that lower time frame. That's how we're able to catch our trades. Now, if we wanted to take a long trade, like a 30-minute trade, we're going to go to the 5 minute and analyze the 5 minute chart and take a trade off of that. We're not more than likely going to come down here to the 30-second and take an entry for a 30-minute chart. That's just bonkers, right? But you take a 5 minute trade, you can do that here. You know what I'm saying? You probably want to analyze a little bit more. If I'm taking a 5 minute trade, I'm probably breaking down the 5 minute time frame to the 1 minute time frame and getting my entry on the 30-second, so I have a better idea of what I'm looking at. But this is for you ultimately, so you can literally just open up the chart. You're on one time frame. You see that imbalance in the market. You have a pattern forming or some confluence that gives you the idea to take the entry, or not the idea, but the confidence to take the entry. So then you take it. And, you know, the timing and stuff, figuring out the timing obviously it's not rocket science, right? But figuring out the timing, it's just over the time of you doing it so much, you'll see what works best for you in that scenario, and then you'll take that. So like when I found the 23-second time, I would jump from 15-second, 10-second to 30-second. I was jumping back and forth and just somehow landed up on a 23-second trade, and that it worked for me. So after so long watching video after video of trade after trade, and I would I would, if I held a little bit longer, I would have won the trade, or if it would have just been a little bit shorter, I would have won the trade. So then I just started decreasing it, and it works. So that I found my sweet spot basically. So that's what I went with. So now let's go ahead and identify another key area. Now, when you're doing this, you don't always have to mark the chart. Like when you get good enough, you're not always gonna go in and mark every single thing on the chart. You don't have to do that. Obviously, if you can see the imbalance, you can see what's going on, and you see an entry, take that entry if you're confident. But take your time. Be patient. You don't gotta rush into it. That's the issue when you actually do put the time in. You begin to start rushing and That's why when you break down the higher time frame to the lower time frame, it's also slowing you down, so you're not rushing into the trade and you're getting a better understanding of what you're looking at. But when you're taking short trades like a 1 minute, 30-second trade, or hell, even a 5 minute trade, sometimes when you go from that higher time frame, a 5 minute time frame, all the way down to the 30-second time frame, or maybe you even go down to the 15-second time frame, well, now, all right, your 15 and 30-second are in the same the same bias, but my 5 minute and my 1 minute are telling me. So now you've got this, what's it called? You got this roadblock that's kind of preventing you from getting confident in taking the trade. So you have to that's why when I'm breaking down, when I'm taking shorter time frame trades, you won't see me always go from the higher time frame to the lower time frame. Sometimes if I'm seeing something that doesn't look good, I will jump to the higher time frame to see what's going on, what's happening up here. Because remember, you always want to understand that the higher time frame holds the most weight. But when it comes to binary, when it comes to binary, I'm not always going to hold my bias, because I know that we could just be in a consolidation, so I could be taking buys and sells, and at some point it could be overbought, and now I could be looking for sells when I was looking for buys the entire time, and now I'm still focused on buys because my bias is stuck on that, but now it's telling me. So it's like, you don't want to be married to your bias when you're trading binary, and especially when you're trading these lower time frame quick trades. If you're trading with the trend, trade with the trend, but don't be trying to trade reversals in the trend. And when it's it's showing you that, hey, it's no longer in trend, go back out. But a lot of the times I won't marry my bias when it comes to me looking for my setup or my scenario. I'll be more confident in what's going on with price and what am I looking at. So very easy to find your levels, your key levels. This is the main thing that I'm doing when I'm looking at the chart. First thing I'm doing is I'm identifying the key levels. Okay, first thing, I'm identifying my key levels. This is the area that price is more than likely going to move to. Now, if you look at these key levels, I know that I have some levels in the middle that price plays at and likes to come to before it pushes to these levels. I can utilize that information as well to help me and prevent me from taking maybe a trade that isn't fully yet developed and moving to the next leg, because it may be stuck in the middle of them two levels and some consolidation. Because just like on the higher time frames, these lower time frames will have consolidation, and you can go down to the 5 second and stuff and see when I say that, I'm talking about scenarios like this where you have lots of wicks, and if we go down to the lower time frame, you'll actually see a lot of the same stuff that you see here. Literally just the same patterns and stuff, price moving, but to you on this chart, you're getting this. So again, after you spend so many hours on the chart, you're going to be able to identify these scenarios and see them. So now when we look at something like this, okay, I'm liking this. I like that it's pushing to this area. Momentum is strong, and we've already kind of came off the bottom. I'm kind of waiting. I know that I'm at this middle area. I'm at the midline. So I'm kind of just waiting to see if momentum is going to break through. Now, am I going to take a trade to the downside? It's got to give me some more confidence to take that. I'm more focused right now on taking a trade to the more on taking a buy because from what I see, it's pushing to this area and it's pushing to this key level before it makes its next move. Now it could make a leg up or it could make a leg down. Not worried, but I'm just waiting to see what's going to happen. Okay. I'm liking that. If we can get a nice close like that, I will take this entry. I like that. I'm going to take that entry. I hesitated a little bit just so I could wait to see if the candle was going to snap back super hard, because sometimes in scenarios where I get candles like this, where you get the nice little, imbalanced candle, sometimes I'll take it and it'll give me a nice pullback and then it'll go. So that's why I kind of just waited. I wanted to be hesitant on it. And as you could see, the imbalance as well is what I was more or less trading to, because I knew price was going to probably push to this area. And I know that there's an imbalance. If you look at this market, let me just make it easier. I won't go out and do all this. But if you look at this market, there's an imbalance, right? Price fills in the imbalances in the market 9 out of 10 times. Price is going to go and fill the imbalance. Why? Because there's liquidity sitting here. There's liquidity sitting here. And price, what does price do? Price just goes, collects the liquidity, and then distributes it. That's all it does. There's only 3 things a market will do: manipulation, consolidation, and distribution. It's going to consolidate, it's going to manipulate, it's going to distribute. If you zoom out of this, like zoom way out, the market's just consolidating. That's all the market's doing. So to understand that, hey, what things go up, they will come down. Okay? And what goes down, more than likely will come up eventually. It's all about putting in the work and the time in front of the screen and the hours that you need in order to actually understand what you're looking at. I could tell you every single thing, but I can give you the simplest words, or I can make it the most advanced words. Like, I can use the most advanced words. Like, you have to understand that a lot of the stuff that people say is just fluff. They're utilizing other words to make them seem more sophisticated than they are. It's the market doesn't care. The market only does 2 things. It goes up and down, right? Price does 2 things, Price does 2 things. It goes up and down. That's it. The market only has 3. The market only does 3 things: consolidates, manipulates, and distributes. That's it. There's nothing else that's going to happen. Now, it's for you to go and understand what's going on. Now, when I talked about the imbalance, when I talk about the imbalance, you can see that imbalance forming now, right? You can see about it. Think about it. The market, what goes up must come down, right? It's an imbalance. The market's up. Look how high the market's going up. It can keep going too. But what's going to happen eventually? It's going to come back down. Why? Because just look at this. Look at this area. It needs filled, right? It needs filled. It's going to need filled. It doesn't have to come back right now, but eventually it's going to need filled. Just like when this went down, what happened? Oh, price went back up. Let's keep going. Oh, price went down. What happened? Oh, price went back up. And then what happened when price went back up? It went back down. Oh my gosh. It's only doing 2 things: going up and down. It's not as complicated as everybody makes it seem. The hard part is actually putting in the work and being disciplined and not getting sold hopes and dreams. It's not easy putting the work in. It's gonna be a time, right? Because you're finding yourself. You're understanding yourself. I can tell you everything. If I could just give you all my knowledge and put it in your head, it wouldn't matter because you don't know yourself as a trader. It wouldn't matter. You could take everybody's knowledge and put it in your head. But if you don't know yourself as a trader, and it's you pushing the button that's buying and selling, you're going to fail because you don't know yourself as a trader. You have to find yourself and understand yourself. And the only way to do that is going through the trial and error. So you know what triggers you, what doesn't trigger you, what makes you feel good in a trade and what makes you feel bad in a trade. Or when you're looking at a market, what makes you feel, I'm super confident in this, versus what makes you feel not super confident. I know that you've taken trades that you felt super confident on. Then you lost the trade and you lost all your confidence, and a couple minutes go by and you were right. But your confidence is already blown. You have to maintain yourself. You have to stay focused and you have to put that work in. Because, again, this is a you versus you. It's a you versus you. This ain't you versus me. There is no competition in trading. I'm not taking your money when it comes to trading. This isn't a meme coin, right? You have to understand that. This is like, you have to put the work in. You have to really go out there and sit in front of the charts, take some losses, and learn from them. Understand what you're looking at. Price is only collecting liquidity. Its only purpose is to collect liquidity. That's it. That's it. And the only way it does that is go up and down. Now it has three phases. The three phases, obviously, the manipulation, consolidation, or the consolidation, manipulation, and distribution. That's the phases of the market. But the market can only do two things. It can go up and down. That's it. So lock in, stay focused, and like, subscribe, and share. I appreciate you. I thank you. I hope that you were able to gain some value from this video. I know it was probably a lot of mumbo jumbo, probably a lot of gibberish talking and stuff. I'm just now getting back into this, so you got to give me a little bit, get back in routine and stuff. But hopefully with this 90-day program that I'm getting ready to start doing, hopefully it'll work out. My 90-day goal, hopefully it works out. Hopefully things go well. If not, it'll at least be documented, and I'll have all that documentation. But yeah, the goal is for sure to go full time with this, and to be able to travel and do like live events, like live boot camps, and bring some people out that are, influencers, and they trade as well. Kind of like, think about like I don't know what you call them, like a Forex summit kind of, but just like live trading, live classes, meeting people that are actually making money at this and are, want to do what you're doing, but taking it around the states and around the globe to you, bringing the online to you, to reality, so you can see it in real life, because that adds another perspective to people. And the goal is so you can see it documented, and it's not something like, oh, he's just, he just got rich off courses. I mean, I'm going to definitely, obviously, make money off content and other things, but the goal is to show you, like, hey, I'm starting with this. You're going to see all of it happen from the deposit to the withdrawals. And, I mean, there you can't really fake it here. There's no faking it here. So that's the goal. And that's the plan. And lock in. Join the chat. Join the Discord. Get in VIP. We're gonna be spinning VIP back up here soon. But if you want the free signals and you want to be able to copy, trade, go ahead and lock in the free PO chat. It's on PO. It makes it super easy for you to be able to get quick access to the signals so you can boom, take the trade. You can literally have the chat right open while you trading and be able to see the trades right there and be able to see them come in. So I appreciate you. I thank you. Like, subscribe, and share.